People are going to focus again on the sub numbers as they do, and they should every quarter. People are looking for 1.6 million U.S. sub ads domestically, and then 7.3 million internationally. But the focus will be more on the guide, whether Netflix feels the need to temper down its sub growth outlook because of the looming Disney entrance, and also because of a pending price increase. So there'll be, I think, a little bit more focus on earnings this quarter than normal with Netflix.
I mean, this should be a good debate, Mark. You're at 480 on Netflix stock. Michael, I think you're at 165 price target. Why are you not as optimistic as Mark?
Oh, you know, I mean, I'm crazy and old-fashioned. I value this company based on free cash flow, and they haven't generated positive free cash flow since 2011. They're burning $3 billion this year, so to get to my price target, they have to be positive by about $5 billion. So a turnaround from -3 to +5. I have that taking about another 7 or 8 years, maybe 10. And my crystal ball just doesn't go out that far. So I'm being conservative, but I just can't justify a valuation at 400.
Michael, clearly that strategy hasn't been the right strategy in most recent years, and the stock, regardless, has soared despite some of those financial metrics you mentioned. Do you think the launch of Disney's service and its pretty cheap price of $7 a month can start to change the way investors think about this stock, more in line with what you're saying than perhaps what the bulls like Mark Mahaney is saying?
I do, Wilfred, and I've been wrong for 7 years, and Mark's been right for 7 years. He's also better looking than me. But you know, the reason I've been wrong is I expected this 6 years ago. I thought that Disney and Fox and Time Warner and Universal would figure out that Netflix was eating their lunch. And I really think that it's not as much competition as it is that Netflix is about to lose a ton of content. So imagine we were talking about Foot Locker, and you heard that Nike and Adidas and Reebok were going to pull all their footwear and go direct to the consumer on their own websites. And all that would be left for Foot Locker is New Balance and Brooks and Keds and Skechers. Who's going to shop there? So I think that's what Netflix is facing. And Netflix has originals, so yeah, you could have a Foot Locker brand sneaker and tell consumers it's just as good as Nike's, but they aren't going to believe that. So I don't think it's competition as much as loss of content, and they're about to lose about 40% of their viewing hours. That content's being pulled from the service as we speak. It's going to be gone in about a year.
Mark, maybe you could respond to that, the new competitive threats, and also try to justify the $480 price target.
Yeah, so this is a company that's GAAP profitable. We think they're on track to do about $25 in GAAP earnings within 3 to 5 years. We think the market, therefore, would be willing to go to $500 to $750 on the stock, i.e., we think the stock can still double from here with a 3-year outlook. Michael is completely correct. This company is not generating positive free cash flow. We don't think it will for another 2 or 3 years, but I don't think that's structural. I think that's elective on the company's part. Competition from Disney, there are 4 major launches this year. There's AT&T, Disney, Apple, and Comcast. I think there's only one that really could gain a lot of subscribers. And I thought the Disney numbers they rolled out were pretty realistic, 60 to 90 million within 5 years. Our guess, however, is that when Disney gets to that level, Netflix is going to be well over 300 million because the value proposition is really enticing at Netflix. The price points are $2 more, but you're going to get 4 times as much content. In terms of the amount of dollars that these companies are spending, 4 times as much content on Netflix as you will on Disney, and you're going to get a broader range of content. Netflix is spending $15 billion a year, cash out the door on content. Disney's talking about getting up to $4 billion in a few years. So I just think the value proposition is broader. It's a scale business. Whoever has the most subs, generates the most revenue, can afford more content, and Netflix is in the winner's position for now. I don't think that changes.